Yo, what is up, everyone? My name is Dom, and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show. They are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Alright, everyone, first one I want to bring up is ticker symbol AQUA. AQUA Water Technologies. Now, this is a water and wastewater technology company. They are in the industrial, I guess you could also say, utility sector. To be honest, I do not know much about this company. I've never heard of it. It looks like it came public in about 2017, as we'll see from the chart when it started trading. Now, there was some pretty unusual random volume here. Once again, I've never heard of this stock, never seen this ticker anywhere. It's never shown up in any of the scans that I do to scan for option volume here. And, you know, all of a sudden there's about 3,600 contracts that traded here of these June 30 strike calls. Now, if you look around here, there's virtually zero open interest in almost all of these contracts. Literally zero. All these are zero. No open interest, barely any open interest. So as you can tell, this thing never trades options. So it's pretty unusual to all of a sudden see 3,600 contracts, over 3,600 contracts traded in this stock. Now, you know, these are a little bit short term here. You know, these expire June 18th. Today is May 23rd. So we have about 3 to 4 weeks for this trade to play out here. You know, I just decided to take a flyer on this one because, you know, it's super unusual. It's unusual the fact that it's, you know, kind of short term here, not super short term, but short term. And also this one never trades any options. I've never seen this one before. So, you know, we just jumped into this one here. And let's take a look at the chart. Now, you know, if we go a maximum chart here, you know, we can see that this thing started trading in October of 2017. So, you know, it looks like it's a relatively new company here. You know, it might be a little bit more defensive because it is kind of a utility industrial here. You know, it's not a high-flying technology company. You know, I don't really love the valuation here. I think it trades at about 30 times earnings. You know, the main reason why I kind of jumped into this one was because I like the chart here. You know, we kind of had a breakout above this 29.5 level here. You can see we came up there. You know, we barely had a breakout above it. You know, we closed above, you know, at about 30 and 10 cents. You know, I'm looking to play this one, you know, for another $1.50 possibly, you know, to 32, and then we will be exiting this trade. So this is a quick in and out trade, everyone. And this thing's going to move fast because, you know, it does expire in about a month. So any option that, you know, expires within a month moves pretty darn fast. So you got to, you know, be watching it. That's for sure. Next one I want to bring up is ET, Energy Transfer. Now, this one does trade a lot of options here, as you can see from this open interest, but, you know, I think that's just because it's such a small stock, or such a cheap stock. You know, it's a $10 stock, call it. You know, another thing I noticed here is, you know, there's not a whole lot of open interest in this put volume here, but, you know, we can see on Friday that for these June 18th 10 strike calls, about over 20,000 contracts traded here. Now, if you go down to the time of sales and check it out, you know, there are some nice orders down there. What I decided to do was go with these July calls, and I did a July 10-12 vertical spread. So I bought the 10 call, sold the 12 call against it. So when we buy one strike, sell a higher strike against it, you know, we are taking down our cost basis on the trade because we're paying for one call, the 10 call, and we're shorting the 12 call. So we're paying out premium on the 10 call and we're collecting premium on the 12 call. So that means we're losing time decay to the call we paid out premium in, and we're collecting on the time decay for the 12 call. So it significantly cuts down your time decay. You know, you're compressed in. You know, if volatility were to crush, you know, you're not going to be experiencing any frustrating stuff like that. So I like doing vertical spreads here. I decided to give myself a little more time here on this trade. You know, they were buying the June calls. I bought the July calls. You know, this is, you know, the second or third time where, you know, they were buying the June calls, and I just decided to give myself a little more time here. You know, Energy Transfer has had a huge run here. You know, if we take a look at the year chart, you know, this thing has had a pretty big run from about $5 to $10. But, you know, if you look at this maximum chart here, You know, I'm not saying energy is going to get, I'm not saying ET is going to get back to 35, but, you know, this stock has been selling off for a while now, you know, so this thing might be overbought in the short term here, you know, getting above this 70 RSI. But, you know, energy is extremely underowned. I really like energy stocks here. You know, it's kind of a hedge against inflation, but, you know, I don't even really like it for that reason. I like it because it's so underowned. You know, these stocks have been selling off for years and years and years. And, you know, energy is, you know, oil is going to be around for, you know, a while, in my opinion. You know, to build, you know, solar farms and windmills and, you know, even EVs, you know, that's going to take energy. And, you know, right now the preferable energy for the U.S. is oil. You know, I know we're moving away from it. You know, we have a Democratic president. You know, a lot of people think that's actually bad for oil companies, you know, which it is in the long term, but it's actually really good in the short term because the Democrats cut off all of the drilling and, you know, building new pipelines and stuff. So, you know, these stocks that have, you know, current oil production facilities and, you know, pipelines and stuff, you know, they may not be building any more of these, you know, because we have a Democratic controlled, you know, Senate and everything, or Congress and presidency. So, you know, the supply is severely being constricted here. So, you know, I really like energy stocks here. Not trying to get political on this channel at all. You know, I'm just telling it how I see it. So, you know, thanks for everyone who's just subscribed. I really appreciate it. Sorry to get a little political at the end there, but, you know, we'll see you in the next one, everyone.